I think the best investment ideas in the last 30 years, they're dominant digital monopolies that everybody needs, nobody can stop,
Mm-hmm.
and very few people understand. And Amazon was like that.
Mm-hmm.
Apple is like that. Google is like that. Facebook is kind of like that. And Bitcoin is like that. Yeah, I think that Bitcoin is first going to flip gold. And when it flips gold, it should be about a $500,000 coin asset.
Right. Right.
But I think Bitcoin is also going to replace bond indexes and real estate and other sorts of property investments. And I think there's no reason why it shouldn't go to $100 trillion. That would put it at 5 million a coin. So I definitely think it'll happen. Like, the question is really just over what time frame. The question really is, are you investing, or are you saving, or are you speculating? If you're a saver, you're not really investing or taking a risk on a company. You're converting a weak property to a strong property.
Right.
If you're an investor, you have to have at least a 4-year time horizon. Okay, if you're investing in something thinking you'll make money in 4 weeks, you're not really an investor, you're a speculator. Now, if you don't know what you're doing and you're guessing, you're just betting on black or red, I call that speculation. Okay. If you have a methodology, if you have computer programs and you have proprietary algorithms and you have special information that no one else has, you can call yourself a trader, right? Maybe you're a trader, but either way, you're a trader or you're a speculator, but you're not really an investor. Okay. Because if you're an investor, you have a thesis that's going to take years to play out. So I would say that if you're looking at something as an investor and you're not going to hold it for 4 years, you're just speculating, you're gambling over whether the EPS will beat the numbers that the street expects next Tuesday, right? And nobody knows. It's coin flip. When you're buying Bitcoin, if you understand it, I don't think you're investing, and I don't think you're speculating. I think you're saving. Mm-hmm. And if you're saving, you're thinking, I'm going to buy it for a decade. And what I would say to people is, if you're not going to hold it for a decade, for 10 years, I wouldn't even hold it for 10 minutes. I think the right way to think of it is, if there's money you need in the next 12 months, you probably should store it in a currency, like a stable currency. If I have money that I wish to save and give to my grandchildren, 10 to 30 years out, or even 100 years out, I want to keep it in my family, then you should be putting it into a portfolio of property, scarce, desirable assets. So property, what is it? Bitcoin is digital property. Otherwise, buy the most valuable land, or you might buy trophy collectibles, Leonardo da Vinci paintings, Picasso, something that is rare and desirable and scarce. If you buy a portfolio of property that is, it's not a company, it's not a currency, it's something that affluent people will find desirable in 10 to 30 years, then that's a saving strategy. If you wish to take risk, if you wish to invest in companies, you're an investor. Now you might decide that you think that Apple is undervalued, or Google is going to perform well, or you might invest in a private company. The advantage of those things is they generate cash flows, but the disadvantage is they have risk. So if you want to take that risk, you can, but it's not the same as owning a city block in downtown Seoul.